Hey everyone, welcome back to the Koo Trading Desk. I'm Maya, here with Vid, my favorite market translator. Okay, so I'm scrolling this morning and Dell stock jumps 34%, 34 on earnings, and I'm like, okay, that's insane, that's like winning the lottery. Vid, why does a number on a spreadsheet move a stock that much?
Haha, yeah, 34% feels wild, right? But here's the thing, Maya, it's not actually the number. It's the surprise wrapped inside that number. So Dell beat what everyone was expecting, and they basically said, hey, we're printing money and we feel great about next quarter. When both of those things happen at once, you get plus 34. It's like your friend says she's getting a raise and she's taking you to dinner. Two good things colliding.
Okay, but wait, how do people even know what to expect? Like, who decided Dell should make X amount of profit?
Great question. Thousands of analysts at big banks run models. They guess revenue, they guess profit. All those guesses average out to a consensus number. And then when the real number comes in, if it's way above, stock pops. If it misses, stock sinks.
So it's like a test where the teacher tells everyone what the grade should be. And then if you do way better, you get extra credit.
Exactly, you just nailed it. Except, and this is the trap, if the teacher also whispers, hey, next year's gonna be harder. People get nervous even if you crushed it.
Wait, what? So you can win and still lose?
Yes, and this is huge for beginners. This is called guidance. It's when the company tells you what they think will happen next quarter or next year, and it matters as much as the actual number.
That's wild. Okay, so if I actually want to read an earnings report, where do I even start?
Three things, Maya, three, that's it. 1. Did they beat or miss the profit number? 2. What did they say about next quarter? Are they excited or nervous? That's the guidance. 3. What's the one-liner story that explains why? Is it AI helping them? Did they lose a big customer? The story is where the risk lies.
And if I don't understand the story?
Read the CEO quotes. That's it. Just copy-paste CEO said from the earnings article and you've got 80% of what you need. The company wants you to understand the narrative because they're selling you on the stock.
Okay, so Adobe's in the news today. Did they beat?
They beat, yeah. But here's the actual story. Adobe admitted in their earnings call that their own AI tool is eating their stock photo business. Like, they built a feature that makes customers need fewer photos. It's brilliant and terrifying at the same time.
Oh my God, so they made money and broke their own revenue stream.
Right? That's why knowing the story matters way more than just the headline number. Adobe beats earnings on paper, but smart investors read the call and thought, wait, did they just tell us their moat is crumbling? Stock flinches.
So when does a company's stock actually go up after earnings?
When they beat the profit number, guide up on next quarter, and the story is clean, no buried bombs. Imagine if Dell had said, we crushed it, demand is hot, we're hiring, here's our new forecast. That's a green light times 3.
And down.
When they miss, guide down, or they beat but the story has a bomb. Like, imagine a big tech company beats this quarter but says tariffs are coming, costs rising, margin will be lower next year. Stock tanks same day. Or Adobe, they beat, but now everyone's wondering if AI is their biggest threat.
So with everything happening right now, Fed sitting, oil dropping on Iran news, do you think earnings will be bullish or bearish?
Totally mixed. Energy companies might be spooked on lower oil. Defense and AI companies are giddy. The trick is don't assume the macro. Read the specific story for each company. Dell killed it. Adobe has a problem, both in the same week.
Okay, so as an actual beginner who wants to use this, what's the move?
When a stock you care about reports, go to the investor relations page, read the earnings summary, find the CEO quote and the forward guidance sentence. That's your work. Done.
What if the guidance is super vague?
Management is scared. Vague is a yellow flag. Companies that feel good are specific. Next quarter margin 42 to 44%. Scared companies say cautiously optimistic. Vagueness is them not wanting to promise anything.
Haha, I love that. So vague equals bad signal. Got it. What if a company beats earnings but the stock still drops the next day?
Markets repricing on something else. Maybe a competitor tanked. Maybe Fed did something. Earnings is one signal, not everything. But usually beat plus good guidance gives you a pop same day or next trading day.
Okay, real question. If I'm building a portfolio and picking stocks, do I need to read every earnings report?
For your longer-term holds, definitely at least once a year after earnings. For swing trades or CSB timing, not really, you care about surprise direction and Roman 4. Good news is, by the time earnings hit the news, half your work is done. Read the headline, CEO quote, decide if the story scares you.
Okay, I actually feel like I can do this now. So the bottom line is, earnings are a test, surprise matters more than the grade, guidance is the forward forecast, and the story is where risk hides.
Perfect and bonus. After you read earnings 2 or 3 times, it gets faster. You start seeing patterns. Good guidance language versus nervous guidance language. You start knowing which sectors guide up or down. It becomes a real skill.
I love that. So go read Dell's earnings if you want a textbook beat and raise. Read Adobe if you want a beat with a hidden problem buried inside. And remember, this is educational only, not financial advice. We're just explaining how the pieces fit. Come hang with us in the Discord if you want to talk through any earnings report you're reading. Thanks for being here.
Thanks, Maya. See you next week.